Hello, it's Jeffrey Christian from CPM Group. It's Friday morning, the 18th of December. This could be our last video for the year. We may come back and do one in the next 2 weeks, depending on how things are developing in the markets and whether or not we can get some time off for the holidays and year-end relaxation. It's actually been a pretty busy year for us, and the year is ending with an acceleration of the volume of work that we're being asked to do. That I think reflects things going on in the precious metals markets as well as the broader economy. I wanted to talk a little bit about where we've been in 2020 and where we think we're going in 2021. We have been giving you our views for some time, but we'll continue to give you our views and we'll modify them as we go. These are a couple charts and tables. This tracks our gold intermediate term 2 or 3 year outlook, printed, published recommendations starting in December of 1980, when I went to work running the J. Aaron Research Department, which became the Goldman Sachs Commodities Research Group, which became CPM Group in 1986, when we did a management buyout of what was then the Commodities Research Group at Goldman Sachs. And you can see that, we've been, from a perspective of an investor who has a 2 or 3 year opportunity, we have said buy here, sell here. From the period 1980, my first recommendation on December 1st, 1980, when I started at J. Aaron, someone walked into my office, actually one of the partners, and said, what do you think, buy or sell gold? And I said, sell gold. So my first recommendation was to sell gold in December of 1980, and we kept that in place on an intermediate term basis until the second quarter of 1982, by which time the price had fallen to about $285 an ounce. From 1980 to 2000, about 68% of the time we were telling intermediate term investors, don't buy gold, sell it. And if you're brave enough or intelligent enough, sell short. And so we ran these 3 portfolios. From 2000 until 2012, we issued a buy recommendation in November of 2000, and we kept it in place until January of 2012. We issued a buy recommendation in the middle of 2013 after the gold price had fallen sharply. The price moved sideways for about 5 years, but now it's starting to rise again. We've run 3 hypothetical portfolios. One is just if you just went long gold the day I started at J. Aaron, and you'd be up 2.8% per year over the last 40 years. If you went long when we said go buy gold, and if you just liquidated and put your money in treasuries, you'd be up about a 9% per annum compounded growth rate in the past 4 decades. And then if you went long when we said go long, and if you sold and actually sold short the same volume whenever we said sell gold, you'd be up about, was that 15% per annum on a compounded growth rate. So it's a pretty good track record. That track record is predicated on analyses that is built on our 4 pillars of research. Fundamental research, really knowing what's going on in the gold and silver and platinum and palladium and other metals markets, actually really knowing this stuff and not just guessing at it or sitting at a desk making guesses as to what's going on. Second one is a macroeconomic top-down view of the world and all of those factors, from currencies and inflation to political unrest to revolution to stock market declines or bull markets to interest rates, especially interest rates, that go into whether or not investors are going to be buying or selling gold. And that is the primary factor driving gold prices higher or lower. The third variable are what we call market developments, which are fundamentals that don't show up in annual or quarterly supply-demand analyses. Trends in central bank buying and selling, seasonality, developments in the futures market, developments in the physical markets, ETFs nowadays. And the fourth one is technical analysis, which we use really for measuring the timing. Once we've looked at the world on a top-down basis and the gold market on a bottom-up fundamental basis, and we say, okay, gold price is going to rise or fall, then we look at technical analysis to sort of give ourselves a sense of the pacing. What's a reasonable, realistic view of how fast and how far gold prices can rise or fall, given our analysis of the fundamentals and economic environment. Now, 2020 has been a pretty good year. The gold price has risen about 24% through December 17th from December 31st, 2019. Silver is up about 46% over that period of time. Platinum even started rising, and it's up about 7%. And quite frankly, the breakout in platinum has really been the last couple months. It was pretty much range bound until then. And then palladium is up about another 23%. So it's been a pretty good year for those people who were long or went long precious metals. Our expectation is 2021 is going to continue that way. Our expectations are predicated on those fundamentals and the macroeconomic. And those of you who watch our videos regularly know that we've been saying that 2021 is going to be the year after 2020. And we're not super optimistic. You're seeing, for example, with the pandemic, yeah, things are getting much worse. We do have a couple of vaccines out there now, and probably by the middle of the year, we might have sufficiently large enough portions of the population, at least in the United States, Europe, and China, to start turning this around. Health authorities, public health authorities, and immunologists think that perhaps by late 2021, things will be returning to some sort of semblance of normality, but that depends heavily on the amount to which, the extent to which individuals step up and get the vaccines. So the pandemic is going to continue. It's going to be worse in the first quarter of 2021. It might start showing some signs of improvement in the second and third quarters, but it's probably going to be a major factor limiting economic and social and political life for most of 2021. Economically, we are fighting our way out of a recession. Things will look better in 2021, but they might not look good, especially in the first half of the year. The second half of the year may be better. Politically, all of those political problems, domestic political problems in the United States, domestic political problems in other countries that I won't name because I don't want to offend them because they take offense, and international problems. All of those things are continuing. We have a scope for some improvement in international and domestic relations, but it's far too early to tell whether that's going to happen. And being basically a pessimist, I am extremely cautious about the outlook for that. So we think that 2021 is going to be a year where things are better, but not great or good, politically, economically, and in terms of the pandemic. And in that environment, we expect precious metals to continue to rise. Gold and silver will rise because investors are buying these metals and will continue to buy these metals. And some of the optimism that we've seen in the last month or two may dissipate, at least in the first quarter of the year. Things may become more optimistic looking in the middle part of the year and then toward the end of the year. And platinum and palladium probably will continue to rise because the reality is that we're going to continue to use more platinum and palladium and rhodium, which I didn't mention, economically. So looking at 2021, we think it's going to be something of an extension of 2020, obviously with some major changes. The fact that we do have vaccines that we can start distributing and that we're starting to distribute is great. The fact that it's going to take months and months and months for those vaccines to become publicly positive is not so great, but it's reality. Economically, we have a lot of challenges ahead, and I think that there's going to be periods of time when people are very pessimistic, and there are going to be periods of time when people are optimistic. Brexit is coming up. It's on top of us now. We have to wait and see how it goes. On Thursday, the British government told Parliament to stand by. It may be asked to vote on a Brexit agreement as early as Sunday, 2 days from now. That may not happen. We just have to wait and see. In the United States, we have to see what happens with the runoff elections in the Georgia Senate seats, because that's going to tell us a lot about whether we continue to have a stalemated adolescent U.S. government, or if we might have a government that runs democratic policies through. Some of the democratic policies will probably be bad for the world and bad for the United States, but having policies that you can then oppose and change and modify to make them better is better than having nothing. So we do think that it'll be a better year. We're not particularly overly optimistic, but we do think that we are going to be digging ourselves out of the holes that the world has found itself fallen into in 2020. On that happy note, happy holidays. Have a good, restful end of the year. And if we don't talk to you before 2021, we'll see you in the first week of January. Thank you and take care and stay safe.